at Start Small, Think Big. I will give you a bit of an introduction about our organization, but today we are presenting in partnership with Axion Opportunity Fund. So we'll also give a few minutes for Meredith, representative from that organization, to tell you about what they do and how you can interact with their services. These slides, if you'd like to follow along at your kind of own pace, you can access them at the bit.ly link you see here, bit.ly/SSTBFM101. So today we're going to be talking about financial management basics for small businesses. We'll walk through what that content is, but quickly letting you know who Start Small, Think Big is. We are a privately funded nonprofit, and we provide under-resourced entrepreneurs direct technical assistance in business services to allow them to support their communities. We do this through staff and volunteers that deliver all completely free pro bono legal, financial, and marketing services. Types of businesses we support range in a variety of identities, ethnicities, and different areas. Right now, we're serving businesses across the country, and they come to us with a number of different products or services and at different stages of their business. So businesses would have to be under $1 million in annual revenue to receive our complete services as full clients. Talk about what that looks like in just a second, but there's no limitations to really who we can serve. If you're in need of services, you should reach out to us and see if we can provide those services to you. As mentioned, these services come from 3 different content teams. So we have a legal program, marketing program, and a financial program. You can see just a brief bit of the types of things we can help with from each of those programs. There's a lot more information and getting into detail on our website, and different resources we'll share with you. But today we're going to be talking about financial topics and the kind of financial management that you've seen in the title of today's presentation. And you can see in this brief description about types of services that full clients receive. We try to provide services in one-on-one settings. The best way for us to do that is for you to become a full client, and that is through an application and eligibility confirmation process. So as mentioned, there's some considerations for businesses that we will not be able to serve, such as having over $1 million in business revenue over the last 12 months. If you are under that, not yet selling $1 million in sales, then we can look at additional criteria. As mentioned, general idea is that these services are not easily accessible otherwise, so that we can convince our pro bono partners to give you their services for free. So some of the things we might look to would be household income, household assets, or as mentioned, different communities, historically underrepresented or under-resourced, especially in the small business community. So as mentioned, a whole bunch of things you can take a look at there, and hopefully we can provide you services if you are in need of them. The process would be starting an application. So we have these links we'll share with everyone. There's one in English as well as Spanish. And in that application, you can tell us about the business you're operating. That is one condition, that you have begun operations and sales. And then a bit more about households, income, assets, outside work. That type of information can help us confirm that you are eligible. That would happen in an intake, and then we would begin to arrange services for you to be received in coordination through the volunteer partners that we work with. All right, so at this point, I'm going to open it up to Meredith from Axion Opportunity Fund to tell you a bit about what they do. Meredith?
Thank you, Ian. As Ian mentioned, my name is Meredith Medlin, and I'm a Director of Partnerships at Axion Opportunity Fund. Axion Opportunity Fund, or AOF, gives women and people of color and recent immigrants and low-income individuals the tools they need to change their lives through entrepreneurship. We offer flexible and affordable business loans to people who have been locked out of traditional financial options, but we also partner with organizations across the country, like Start Small, Think Big, to provide free education and training, business coaching, and networking opportunities to small business owners. So these tools empower entrepreneurs to grow their businesses, to reach their personal, professional, and financial goals. Our support for underserved entrepreneurs contributes to a more inclusive financial system for our whole country, while also creating further opportunity for business owners, their employees, and their families. Since our founding 30 years ago, almost 30 years ago, we've provided over $500 million in small business loans to entrepreneurs across the country. And we also reach several thousand people with our educational resources every year. So if you're looking for business advice or you're ready to explore working capital options for your business, I encourage you to check us out online. So we have a resources landing page on our site that's a super helpful place to get started. So I'll drop a link to that page into the chat box now, and I will hand things back over to Ian. Thank you.
Perfect. Thanks so much. So I'm going to cut off my video as we get into the content of the slides. So you can focus just on those, and I won't distract you with my mustache. All right, so the workshop today, where I've kind of broken these down into two main pieces. The first being just tracking finances. It's going to be really important for you to be able to see what's going on after there's systems that are tracking in real time what's coming in or out. So we'll talk a bit about separating those finances and banking. And then we want to talk more specifically about how that raw data gets organized in a way that you can actually analyze it and discuss the operations in a way that financial analysts, maybe advisors, lenders, partners can understand what's going on. It'll allow you to better tailor the story or the narrative that you want to tell, and hopefully allow you to make more informed decisions as you continue to operate your business. So the first part is kind of tied together, this idea of separating finances and banking, because banking is really the easiest way to kind of start that foundation of separation. Now, there's two main considerations here. For one, there are legal requirements for certain entity types. So if you are an LLC or a corporation, then you really need to have something that's a separate business bank account and is under the business's name. The whole idea of these distinct entities, like an LLC, a limited liability company, or a corporation, whether that's an S corporation or a C corporation, is that these have separate and distinct and limited liability that does not affect the owner or founder in a personal capacity. So you would not want to have your business finances on a personal bank account, or vice versa, a personal transaction on a business bank account if you have one of these entity types, because a judge in a case of a lawsuit or a debt collection would ask for your business's finances, and if they have to see a bunch of transactions or a business or a bank account that is named under your individual name, then they can consider you to be commingled, you, the owner, to be commingled with the business, and therefore not being provided that liability limitation. You would essentially have unlimited liability. The business gets sued and they can collect on your assets, your future wages, affect your credit. So the ideal would be if you have a separate entity, that you have separate finances under that entity's name. Now, for other folks who have not yet set up that entity, or maybe do not want to set up such an entity, you're essentially operating as a sole proprietor or a partnership if there's more than one of you. In those cases, you would still benefit from having at least a separate place or a separate bank account where all of the business's transactions are occurring. This is just for the sake of organization. It will just be easier for you to see what's actually occurring in the business rather than having to go through your bank statements and say, this is personal, this is business, whether that's for yourself when you're reviewing operations, or if you're submitting your statements for tax preparation, the end of the quarter, the end of the year, if you're trying to get a loan from a bank, a lender. The more work that you have to do to identify what's actually business operations, the more time it's going to take, and probably the more it's going to cost if you're having someone else do that for you. And as mentioned, so all not just save you money in these processes, but allow you to more easily see what's actually going on. There might be occasions where there's fraud or mistakes. And if you're able to see more clearly what's actually happening, you're more likely to identify the problem and fix it sooner. There are also additional benefits to having different types of bank accounts, depending on the institutions you go to, the types of products you use from those institutions. That could be things like interest or other credit options, other banking options. We'll talk about that in the next slide, just giving you some considerations. Now, the difficulty that a lot of folks run into when trying to open up something called a business bank account is that they might not have the appropriate documentation. So the general idea with any bank or institution is going to be that they will not open up an account for someone who they don't know actually owns the account or owns that name. So in those cases, if you were trying to cash a check for a business name, they would want to confirm that you are the person who's supposed to be cashing that check, that you didn't just find it from someone else. So in those cases, you would want business founding documents. That might be articles of organization or incorporation, depending on the state and the entity type. And then for yourself as the owner, of course, if you're someone who has a social security number, that can help with the identification. But even for folks who might not have documentation or citizenship, there are options around getting a taxpayer ID called an ITIN that doesn't have a direct implication for immigration. It's just an idea that the government knows people are making money. If they can get people to pay taxes, great. So they're not supposed to have an impact on immigration. You can pursue or start talking to folks about getting an ITIN. It's an individual taxpayer identification number if you're not able to get a social security number. There are also other ID types like a municipal ID. For example, in New York City, we have an NYC ID that can allow you to work with different banks. So you can check out the NYC ID if that's relevant to you, but your state, your city might have a similar thing, even if you don't otherwise qualify for something like a driver's license. The other types of things that you might get asked for are really just up to the individual institution. The person that you're talking to might not know the requirements of business operations, so they might ask for something like an EIN, which is essentially a taxpayer ID for the business separate from the owner, or a seller's permit, or a sales tax registration. In New York City or in New York State, that would be a certificate of authority. In those cases, you might not be required to have it by the tax authorities, but the bank might ask you for it. So if you can get these things, it can often be helpful to kind of prove that you are the one who's supposed to be cashing checks for this business, writing checks in this business's name. Now, a quick bit of considerations for choosing a bank account. There's always these kind of two sides of an issue. We're talking about costs versus benefits. There are a ton of different banks. The more common ones that you might see on any main street throughout the country, more local ones, even online banks that all kind of offer different options. General idea would be looking for a checking and a savings account. Over time, you are trying to build credit. There might be different institutions that have better products, checking account product, saving account product for you based on your specific needs and the things that you're looking for based on your business operations. So one thing that might seem a little bit simple, but really can become a big deal are the fees. There are fees that often occur monthly or annually, or when you first start up the account. For those maintenance fees that would otherwise occur monthly, you can typically find most banks have fee waiving conditions, but they vary based on each institution. Some banks will have that maybe $10 or $15 monthly maintenance fee waived, meaning that you don't have to pay that fee if you either sign up for direct deposit, those kind of on personal bank accounts, or if you have a certain number of purchases made within the month, or if you maintain a balance, you keep enough money in the account for a long enough period of time. Another type of fee that can be, again, surprising and build up over time is the ATM fees. Again, might sound simple, but if you are operating your business in a place that does not have a lot of your bank's branches, and you end up using other banks' ATMs, you're going to get charged for each of those. And if you have to do that a lot, it could become even higher than what your monthly maintenance fee was that maybe you made an initial decision on. So you want to be considering either if you're paying for fees, if that's part of the banking product, or if there are enough branches from your bank so that you won't have to pay those fees. And then another consideration, this is overdraft. Now, in some cases, you might just accidentally use your, let's say, debit card when you don't have enough money in your checking account for the purchase. Most banks will have that as an allowed option by default, where you can overdraft, pay for more than you have money, and then they'll charge you a fee on top of that. What I would generally suggest in these cases is to ask them to turn that off. So there's different options. If you have like a credit product, they might give you an option to shift it over to a credit card when you overdraft. But there should always be an option to just decline your card. That might be a little embarrassing for you, but from a financial perspective, it will save you from not only spending money on something that you don't have money for, but avoiding that often $35 fee. So you can ask the bank to either remove the fees if you've had them occur, and then in the future, just turn it off. That's my general suggestion. Some of the benefits that you might be looking for, as mentioned, with both savings and in some cases checking accounts, you can earn interest. So over time, the money that you've given the bank, they can use it for other things, even though you still have access to it, and they'll reward you for that with interest that you earn. Right now, historically, we have historically low interest rates, so you're not likely to earn that much money. by keeping money in a savings account or a checking account. But if you have two bank accounts with everything else the same, maybe having a higher interest rate in one leads you to choosing that over the other. As mentioned before, you might be interested in building credit for the business, and it might be hard for you early on to qualify for credit cards, different loan products, or lines of credit. So working with a bank who, even though you don't qualify for their credit programs yet, you know that they have a lot of different options for credit, and that over time, after you build a relationship with them, that you would like to have access to their credit options. That might be a reason for you to choose a bank with that long-term consideration. There are often other services outside of traditional banking that different banks or institutions offer. We especially see this with community banks, CDFIs, or credit unions, where they offer, in addition to traditional banking, they might offer tax filing or preparation, either for free or for a very affordable rate to members, to those who have accounts at their institution. Or they might offer things like business planning, strategy, financial projections, things along those lines. And in general, having a relationship could be something that's helpful in a number of ways. They might be able to suggest a number of different services based on their interactions with other businesses in similar situations to yours. So something to consider, what could that relationship, either with individuals at the bank or the institution itself, lead you to. And then the last thing, which is going to tie into a couple other pieces, is accessibility. So in a very simple sense, can you access this bank easily because they have branches that are close and local to you? And then because we're in 2021 and you want to connect a whole bunch of other business services or financial or personal services to your bank account, the question of how good their online infrastructure is, how good is their online banking, becomes really important when you're considering these additional things that we'll talk about today, like bookkeeping, point of sale systems, tax planning as well. All right, so before we jump into that next question around bookkeeping, using online bank account tied to a bookkeeping system, I do want to address the sales tax question, which is a fundamental one for folks to understand. It can be very confusing. So the degree to which you understand it shouldn't be something you worry about the first time you think about it. What I've laid out in this slide is a series of questions for you to ask, essentially your state and where you are operating. The general idea is that sales tax occurs on taxable sales based on where you're making that sale. So the first question is about where you're actually making sales. This is referred to as nexus. The general idea is that if you're operating or making sales in New York State, that New York State has legal jurisdiction over you, that they can require you to follow their sales tax laws. This becomes a little more difficult when you consider online sales and e-commerce, because you might not be physically, your business, they might not be standing on another state's grounds, but you end up sending your product to another state. So in most cases for small businesses, you don't need to worry about where you're sending your product. You probably don't have what's called nexus there. But the thing that makes this difficult, like many other laws, is that each state has its own definition for this. The general idea is going to be that if you're only making a few sales in these different states, sending your products or sending services over to different states, you probably don't have Nexus. But if there's substantial sales, or you're partnering with another business, or you have a warehouse in some other state, that's when you might want to look up, do I have Nexus in that state? Now, if you find out which states you have to follow sales tax laws for, then the next question is based on the thing that you're selling, because not all sales are actually taxable. So if you find out that I have Nexus in New York because that's where I live and my business is headquartered, but I also have Nexus in California because I have a distribution partner there, then those two states, when I sell to customers in those two states, I have to know whether the thing I'm selling them is taxable or not. And again, this changes based on states. So in most cases, you'll find that states say products, tangible goods are taxable, and that services, kind of information sharing, discussions, advising, coaching, those things might not be taxable. Unfortunately, it's not that simple. Again, each state has their own nuanced considerations for what should be taxable or not. In the example I just gave around products, many states don't consider food or grocery products to be taxable. New York State, for example, doesn't consider clothing taxable unless that clothing item is over $110. Right? So again, it can be very confusing. It's based on the states and the things that you're selling. But if you can describe this state and this thing that I'm selling, you can find a pretty straightforward answer by searching that state's tax authority website. I'm more than happy to help clients try to figure this out, but you can always directly ask the state. You can call up your tax authority. So once you register with the state, then if you're using point of sale systems, whether that's like Square or Stripe on your phone, or you have a website like Shopify or Squarespace, you can then set up sales tax for each of the products that are taxable. And then it will see if you're sending a product to a state where you don't have Nexus, it will not add on the sales tax. And if it's a state you do have Nexus, it'll collect. So the next parts are then just making sure that you understand which money is actually yours or which money needs to go back to the state. So that's going to be really helpful when you're doing bookkeeping. The bookkeeping will allow you to distinguish essentially what's called taxes payable. So money you've collected, but you need to pay to the government versus actual income, sales, or revenue, money that's yours to choose what to do with. We want to make sure that's distinct in your books and in your mind, so you don't get surprised at the end of the quarter or at the end of the year. And then you just file that. You tell the state, I've collected this much. Here's my bank account number, so you can have it. Now, for most kind of first year businesses or really small volume of sales businesses, probably don't need to file any more frequently than each year. But the default for any taxes where they're not withheld for you, like sales tax or self-employment income tax, these are probably expected quarterly, every quarter. So again, really need to look this up for each business, each state, each set of operations, but there are answers to it. Hopefully this set of questions can help you through it. So now I want to jump into the bookkeeping idea. As mentioned, if you have a separate bank account, you can more easily identify what's going on, but you might have deposits in there that didn't actually come from sales. You don't want to just look at, I have $1,000 in my business bank account, so things are going well, because it might be that some of that money came from a loan. Maybe some of that money is sales tax that you collected and now owe back to the government. There could be any number of reasons outside of people are buying my stuff that's given you money in your bank account. So the idea of bookkeeping is that you get the opportunity to explain to yourself or anyone else looking at your business's numbers that what those transactions are and what that means in general for your business. That's really done through financial statements, right? So we'll talk about the profit and loss today. It's really your primary financial statement, the thing you'll use for filing taxes or submitting loan applications. It's really one of the big three, but today we're probably just going to talk about the income statement itself. It's the core document about your business operations. And it's going to allow you to see whether the business is doing as well as you hoped, if changes need to be made, and a number of other considerations. There might be much more straightforward things like, I need to stop spending this amount of money. I'm over budget on this type of transaction. All of that will be much more easily done if you're using a bookkeeping system. Now, bookkeeping and accounting has existed for hundreds of years, well before we had computers, but it can be really confusing to learn yourself and then to keep track of. So luckily, we have these electronic digital systems that can connect not only to your raw data sources like your bank account or your point of sale system, but they can connect to any device that you can log into and access access the internet from. So these cloud-based systems are different than what folks might be used to from the older versions of something like QuickBooks or Quicken, where you might have bought a CD, plugged it into your desktop at home, and then your books were just on that device. Now, if you're using one of these systems, you can log in from your laptop, from your phone, from a library computer. You can even have a friend, your business partner, or an accountant log into your set of books from another device. And you can actually choose, allow them to look at XYZ, allow them to look at only X and Y, a number of different ways for you to share this information. And it's really helpful because you won't have to redo information in real time. Things are getting tracked in real time. Transactions from your bank account or point of sale system are coming in to these bookkeeping systems. And some of them have essentially artificial intelligence that allows them to start learning from how you use the system. And that will, over time, save you time because the system's doing it for you. So the two systems that I have logos for here, the one being QuickBooks and the other being Wave, these kind of represent the two ends of the spectrum from how I see it about what bookkeeping systems can do. But they are just two examples. There are dozens, if not hundreds, of different options for bookkeeping softwares. I'll tell you what these two do. And if you know there's another one that does something else that you want, then maybe it's going to be a reason enough to pay for that system. The payment is the reason why on this next slide, I'm starting off with Wave. The reason I start off here is because it is primarily a free bookkeeping system. You do not have to pay a monthly or even a one-time fee to start using this. So again, general idea would be that you can log in, you can create an account on Wave, and then you can connect a bank account, potentially even a point of sale system, and start doing some of that categorization. Right? You can say, this deposit in my bank account, this was sales, I did good that day. This other deposit, this was not sales, this was a bank loan, and I have to pay that money back at some point. But you want to be able to make those distinctions. There's other options that they'll allow you to do, things like sending invoices, right? So if you want to notify your clients or customers how much they owe you, you can do so. If you have, maybe you didn't use your bank card, but you used cash to purchase something and you got a receipt, you can take a picture of that receipt and upload it to your Wave account. And this way you can see that information, even though it's not synced or it didn't come through this synced bank account. There's more detail for folks who might be a little familiar with accounting. You can change between cash basis and accrual basis. We're not going to talk about that today, but there's options. And like I said, the three main financial statements, your income statement, your balance sheet, and your cash flow statement, all of that will be automatically getting generated. As long as you tell the system what that transaction was for, it will automatically generate these financial statements for you. And then hopefully over time, you'll not only understand what those statements are, but you'll be able to strategize and structure them in the way that is most helpful for you to either understand your business or to tell the story of your business to others. Now, there are services where you can pay Wave. So if you sent that invoice and you want them to, and you want that client to pay you electronically, automatically, they can do so by clicking a button on that invoice. And in that case, Wave will take a payment processing fee. So that fee is roughly the same that you would pay in any other business payment processing system. It's around 3%. So whether that's Square, QuickBooks, or any other system, if you're using electronic card payments, that's typically going to be the cost of that payment to you. And that would come out of, if you charge them $100, you would only see $97, right? 3% would be taken out. If you have W-2 employees, you can do payroll processing through this, meaning that they can hold onto the taxes that you need to pay and that employee needs to pay to the government. That can make things a lot easier for you. If you're just using contractors, you don't need to pay anyone to do that. And they also have options to partner with H&R Block to file income taxes. They particularly use H&R Block because a couple of years ago, H&R Block bought out Wave. So Wave is now the kind of user interface for H&R Block. Now, QuickBooks is a more advanced system, has a ton more options, but it has a cost to it. So the first thing to consider is, am I looking for full business bookkeeping? The lowest cost option that you'll see when you see QuickBooks offers is something called self-employed. QuickBooks self-employed is really not full business bookkeeping. It will allow you to send invoices and it will allow you to categorize transactions, but it's not doing what's called double entry accounting. So there's no debit or credit, or there's no debit and credit for each transaction, which means you cannot run a balance sheet, nor can you distinguish between cash basis and accrual basis. So the three squares that I have below, this is where the different subscription levels come in, and where you would have actual full business bookkeeping. In double entry accounting, you get all of the kind of core capacity, but there are some additional features if you start paying more. Now, these dollar amounts are after discounts, so you might be able to get 6 months 50% off, but at some point you'll have to pay this. The other option is if you work with an accountant who has a QuickBooks subscription, they may be able to get you a permanent discount by using a QuickBooks account through that accountant. So if you're using an accountant for tax preparation, you should ask them, do they already have a QuickBooks account for me? The types of things that you might want to pay or that might make you find these costs to be worthwhile really start at kind of the $40 level, unless you know in the future I'm going to get to these additional levels. Then maybe you just want to get started on QuickBooks one way or another. But if you're trying to manage things like recurring invoices or recurring bills, things that you have to pay, there's more options for you to do so on this essentials level of QuickBooks. And then at the plus level of QuickBooks is where you have more opportunity to do things like inventory, really only useful for product-based businesses. We're not talking about the amount of staples you have on your desk, we're talking about the things that you buy and then sell to other people. If you have multiple departments or locations in your business, you might benefit from what's called class or location tracking, which can essentially allow you to run like 2 different sets of books in your bookkeeping system. One for location A, maybe it's my Harlem store, and then my Bronx store. You can have both of those separately tracked, both income and expenses and much more with that feature. And then project profitability for folks who might be doing long-term jobs with one client. You might want to see, what are these expenses I'm building up over time? All right. The last couple of things I want to talk about are the vocabulary. We're going to wrap up in a few minutes to give time for a couple of questions that came in. But the important thing to know about how an income statement turns into your tax filing is to understand what's even on it, right? So sales are fairly clear, but when we get into the expenses, it can be confusing. There's 2 main sections of expenses on any profit and loss statement. One is this cost of goods sold, and the other is operating expenses. The easiest way to distinguish between these 2 sections is the question of, when do I pay for this thing? If you pay for this thing every time you make sales, meaning that if you don't make sales, you don't pay for it, then that's a cost of goods sold. If, however, you pay for something, maybe it's a monthly subscription or a full-time employee, those things are considered operating expenses. They do not directly increase or decrease with increases or decreases of sales. So that's why we call cost of goods sold direct costs. They are directly tied to the sales, whether you're making sales or not making sales, and operating expenses, which are not directly tied to those. Now, this distinction might not be super clear to you the first time you hear it, and that's okay. Over time, you might change it. You might realize this thing is actually a cost of goods sold, so I'm going to consider it as such. Even the IRS, when you pay taxes, is very flexible. They have a number of different ways for you to consider it. The reason why it doesn't really matter to the IRS is because any of your expenses are just there to reduce what your total sales are. And that means you're going to pay income taxes on what remains. So they don't want you to just come up with as many different expenses as you possibly can, adding in things like personal expenses that you didn't need for the business, because then you're not going to pay any income tax on the sales that you made, right? You might record so much in expenses that it looks like the business didn't make any money when you subtract those expenses from the sales. So that's why the IRS uses language like ordinary and necessary for business operations. So the general question that you should be asking is, would I pay for this thing if I was employed elsewhere or running a different type of business? If the answer is yes, then it's at least not 100% a business expense. If, however, you are only paying for this thing because you are running this business, then it probably is 100% a business expense. So some of the questions that ideally you want to talk with an accountant, a hired accountant, about for your circumstances is how much of those mixed, the ones where I still would have paid for this if I wasn't running the business, but I'm using it for the business. Some might say that 50% of that is a safe cap for you to use when writing off these mixed use expenses, but that's not what the IRS would say. The IRS would say, or it does say, that if you're using something like a cell phone, that they have the right, if you get audited, to actually look up your expenses, to look up your cell phone activity and figure out how much of this cell phone got used for personal versus business. And if it's 30 calls out of 100 were business, then you can only write off 30% of your cell phone bill. However, that would require a very detailed auditor, someone who's really looking to collect as much as they can from you for the government, or from you for the government. So that's often why you hear people say these kind of general numbers like 50%. There are other things that have more specific legislation or laws around them. Meals and entertainment is something that gets changed every couple of years. So you really want to talk to someone about how much can I write off? Is this really a business meal? Is this really a business Broadway show? Whatever it is that you're spending money on. Then things like rent and miles are just very straightforward in the way that the IRS suggests. The IRS gives specific formulas for you to do a calculation, but it might be more that you can use or write off as an expense than you realize if you talk to an accountant. So that's always going to be the idea. So like we've said, this general idea for your income statement, you've got sales up at the top. That's because you can think of this as a scroll telling the story of your business. I have my operations had 85,000 sales. How much did those sales cost? That's what the next part of the story is. And that's why it's cost of goods sold. To make those 85,000 in sales, I had to spend 6,000. That means if I make twice this much in sales next year, I'm going to have to spend twice as much in these expenses. Now, not every business is going to have cost of goods sold. This example does. It has some, and you might have different categories in here. It's all okay. The sections are always going to be revenue and expenses. And when you subtract cost of goods sold, that's when you're left with a gross profit. That gross profit kind of tells you this core of your business, how much does it cost to make just these sales. The rest of it is going to be about how much does it cost to just keep the doors open, keep this business operating. And when you subtract that from the gross profit, that's when you're left with your net income, otherwise known as your net profit. That's really the question of, is the business bringing in more money than it spent? Now, there's a bunch of other numbers that you might be thinking about, but this is the core of your business operations. Am I doing well enough to keep running the business the way I am? Do I need to make serious changes to the business? That will all get answered very quickly if you have your profit and loss statement, otherwise known as your income statement. And that number, that bottom line number, you're literally the bottom line in the position on the statement. That's what your income taxes are going to be based off of. So whatever percentage of income taxes you owe based on what your total household income is, that would be applied to this bottom line number. All right, so I want to open up the questions. I see I think this first question from Michelle is an ITIN the same as an EIN? So an EIN is, the E stands for employer identification number. So the EIN is particular to a business operating. And in many cases, businesses don't need the EIN, but there's some reasons why you might, like if you have W-2 employees. The ITIN is about individuals. So the ITIN you can get as an individual, which can help you do things like open up a bank account, keep the IRS off of your back, and pay taxes to them, or open up things in your business like business bank account, or get in a taxpayer ID for the business. But they are taxpayer IDs, the same way that a social security number is a taxpayer ID. And then the next question I have is, can you give a little more information about which accounting systems would be better for different types of businesses? So there's really not that easy of an answer for like the examples you've given around a new business or a service business or a moderate sized business. The first thing that I would say, and I would say specifically to someone asking this question, is if you don't know a reason why you should pay for a system, then just use the free system until you figure out that it's not doing enough for you. You can always move into additional systems later on. At the end of the year, your profit and loss for that year starts at zero. So if you start from scratch on a new system, you're not losing any information there. So my general suggestion, and that's why I started with Wave as the first, describing it first. If you don't yet know why you want to pay for a particular system, just start using a free one. It does a great job of getting you your books. And then when you realize there's additional things like I want to be able to manage inventory on my bookkeeping system, then you might ask yourself, is it worth paying $70 a month for something like QuickBooks? A lot of the other systems have things like client resource management or schedule management, a number of different things that aren't necessarily bookkeeping, but services that folks like. So so those might be reasons why someone uses one system, even though it's not really like a bookkeeping system in and of itself. Sorry if that's not that straightforward of an answer. All right, so I want to switch into the last, just leaving you folks. We're going to share resources and slides and a recording with everyone. You'll see these links where you can interact with Start Small, Think Big and our partners. You can attend different webinars like this, receive different services from us. You'll see one survey that's your Knowing Your Numbers survey. This will be an opportunity, even if you're not a client, to answer some questions and get a quick response about how confident you seem in your business model. So for those who indicate that they don't understand their business model, aren't confident about it, you'll receive an opportunity to talk with our staff in a one-time meeting to try to address those concerns, figure out next steps for you. And there's additionally, we're going to send out information, especially for New York businesses. We're working with Empire State Development Corporation on funding for those affected by COVID as well. So there's a bunch of different resources. We'll share all of it with you in an email in addition to this. And yeah, hope that's all helpful, and want to encourage everyone to reach out if other questions come up. So if we're okay, I'll allow my staff to notify me if I'm missing anything, but otherwise we'll close out and hopefully talk to you folks soon.
Thank you, Ian. And thank you to Ali, our wonderful interpreter for today. Really appreciate his support as well.
Yes, thank you all. And thanks to Katie, Gray, and Meredith. It's been tremendous help in putting all this together. We'll see you folks soon. There'll be more webinars kind of progressing along this content. You'll see that in the email.